Corporate level strategy identifies overall goals for the corporation, the types of business in which it should be involved, and how business units should be governed. Firm's goal in the fashion industry in the past might have been to sustain its market share, but due to new opportunities, a firm's goal might change to increasing its market share, like in the recent global recession when fashion companies like Ben Sherman was losing revenues in the domestic market. They looked on expanding to new markets such as China and Hong Kong. Business level strategy covers the strategy for the business units. The three generic strategies identified by Michael Porter, which are cost, leadership, differentiation, focus. For instance, Lacoste uses a hybrid of differentiation and focus. Lacoste sells different ranges of products such as shoes, perfumes, glasses, etc. In the future, they might change their strategies from a hybrid of cost, leadership and focus to just focus to take advantage of new emerging niche market. Functional level strategies. In the functional level strategies, the corporate and business level decisions are implemented to the departments. Strategies in the past might have been authoritative, but might change into less authoritative due to new firms being created all over the world.
An industry is defined by Porter as a group of firms that produce the same products and services that are closely substituted to each other. Well, if you would conduct a pastoral analysis on this industry, you would see that there is only minor pressure from the political side. Hence, the government still tries to indicate to the clothing labels that producing domestically could bring them certain benefits. But if those benefits outweigh the production cost in developing countries like Asia, is questionable. If these benefits outweigh the production cost in developing countries like Asia, is questionable. But there's not only a need for the government to keep competition and other factors up as the market on itself does. Economy-wise, there's not really been a notable negative impact on the fashion industry caused by recent recession, not dramatically. People still spend their money on clothes, but people spending money on higher priced labels has fallen, while the demand has slowed down. Since this is a market with products of short term, consumers have become more price sensitive. The higher the cost of living is made consumers cautious and reduced the demand level. I'd say the emergence of shopping online kept the fashion industry stay stable through the recession. It's one of the key factors. Also, the rise of the euro and the depreciation of sterling pound and the US dollar made London as one of the major cities where people went to buy clothes. My friend Simon Wilson, CEO at Next, told me the other day that it's true that consumers being pretty price sensitive, although inflation and mortgage rates remain at encouragingly low and unemployment, which is still at risk, is not preying on everyone's mind right now. They're not splurging out, yeah, that's something, but they're still spending as much as they did last year. Amongst other analysts, there was the fear with the weak pound would not be able to display the real buying power, since the profit margin would still stay low. But when the economy starts rising again, retail fashion will pick up on profit again. Social cultural issues are the fact that more and more domestic tailors lose on their stake in the market. Unemployment in this sense could have risen, but people are getting more and more confident in buying clothes online, and it becomes more and more safe. Technological factors, I would say the major invention in recent years was like buying clothes on online shops. So if you were a clothing brand, you could just sell your product on the internet with the degree on the necessity of stores and personnel decreasing. Through the internet and the TV presence, consumers can be easily addressed. And there's more interactive buying behavior, ensuring new channels of distribution. Concerning legal issues, I'd say it's mainly about the child labor and exploitation of underpaid workers in developing countries. There are several treaties that set the standard for manufacturing clothes in Europe. However, producing in Asia is still cheaper, as they don't follow these treaties really.
So why do you think this industry has so successful in the last years?
Through research, we found the main key factors for success in this industry, in the fashion industry, is the product, most of all, demand of the customer, market segmentation, distribution or place, research and development, where the trend is going, the design, promotion, production, quality of the product, personnel, or human resource factors, price.
There are new markets being created all over the world. Major economies like China, India and Russia have emerged as the fastest growing market for high-end fashion and luxury goods. These emerging markets are likely to provide immense growth for the fashion industry. So in the future, we will see expansion and growth. We can already see this happening with joint ventures and mergers taking place with local companies, franchises popping up all over the world. As disposable income increases in these new markets, we are seeing rapid changes in people's taste, and with continuous changes in customers' lifestyle, personality and psychology, most segments in the market are likely to be created. And since this industry has a low entry barrier, we will see more players in the future and existing companies spreading out into newer segments to satisfy customer demand. Since fashion industry is rapidly growing market, and because it is a very competitive market or near to perfect competition, the product portfolios of companies in the industry will increase. Threats in the fashion industry. Since it is a growing market, potential for high competition induces new firms to enter a market and incumbent firms to increase production. The industry becomes crowded with competitors, and demand cannot support the new entrants, and the resulting increased supply. The growth rate slows and the market becomes saturated, creating a situation where there is too many goods and too few buyers. And because the industry has low entry barrier, low switching cost and low product differentiation, competition intensifies, such as price wars, and company failures are inevitable. External environments such as global recession has a negative effect on the industry. With limited or no disposable incomes, we will see a slow growth, losing market shares would result in company failures. High levels of substitution, the low level of product differentiation. Companies such as Nike, which is in the footwear industry, and supermarket chains would act as substitution by providing similar products through branding and various media. Where companies buy and sell in different countries, in different currencies, the exchange rate fluctuations can affect their profits and revenues because companies might be selling at a loss.
So everybody's saying the role model of UK's fashion brand is Ben Sherman. Let us take a look inside this firm that made such an impact on the fashion and music world.